Hey everyone, so welcome to lesson one, which is what is Forex and common terms. So just to recap on what Forex is foreign exchange, meaning the trading of currencies of other countries versus other currencies of other countries. Basically just the exchange of one currency paired to the other on the computer or of course through a platform, which we can legally do through brokers. It's very similar to trading stocks, but of course instead of trading companies, you're trading with currency pairs. There's more volume, more leverage, less account needed. There's all the benefits of trading with many less risks than what you'd expect in stocks. Now, of course, we need to go over the common terms of Forex because a lot of people, when they first get into wanting to trade, they're getting into a whole new world where, of course, there's whole new lingo that they need to understand to be able to feel at home within the community. So first of all, we're going to go over the common terms so you can understand a lot of things when we're going through our lessons. You can be in tune with what I'm going to be saying so you can understand the most of what we're getting into. So first of all, a pip. A pip is basically what people talk about in units of measurements. It's the most common term of measurement in Forex. So when you're calculating the markets, we're going to go over it. Pip is the most common term. Usually it's the second last decimal place on your MetaTrader on your phone. That shows how many pips there is. Now, of course, there's also a pipette, which is basically 1/10 of a pip. It is the last decimal place ever on your MetaTrader is what you would count as a pipette. Now, a lot is what you're technically trading in the foreign exchange markets. A lot is technically, if you want to go down to the fundamentals, is $100,000 trade in the foreign exchange market. But all you really need to understand with what a lot is a lot is the amount in dollar value that you're going to gain or lose for every single pipette moved in the market. So if you place a dollar lot trade, that means every pipette that goes in your favor, you're going to gain $1. Anyone that's not in your favor, you're going to lose $1 until that trade is closed. When you hear people talk about a cent lot, that is simply just in the terms of instead of a full lot, it's a fractional lot, so one of the decimal lots. So let's say if it's a 0.25 lot, some people might say it's a 25-cent lot. You're going to hear that terminology. It doesn't mean actual cents. It just means cent lot in terms if you're looking at like $1. Now you're also going to hear the term candle or candlestick. This is what we refer to each single marker or tick that you see on the chart. They are actual candlesticks that they look like. So we call them candle or candlesticks. They're actually based off of Japanese candlesticks. That's what they were originally named after. But this is the way that we look at the markets to determine how the market moves, and that's what each individual ones. Of course, there are 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, daily, weekly, monthly, and sometimes even more variable charts. And each time you see a red or a green or whatever color the ticks may be, that is technically a candle. Now, the wick of a candle is basically when you see something look like a candle where it's a full body colored, and of course there's a line within that color that either goes up or down or both ways on it. That is what we call the wick. So you're going to hear people refer to, hey, do you see that wick? And they're going to be referring to on a candle that has a long stem, and we're going to talk about how that and why that happens. Now, of course, you're also going to hear pair abbreviation, and these are just some of the common ones. We're going to hear them all over. EUR/USD stands for the euro versus the US dollar. Some people might even call it EU for short. USD/JPY is the US dollar versus the Japanese yen. You might hear it called UJ for short. The GBP/USD is a Great British Pound versus the US dollar. You might hear it called GU for short. So when you hear people say, hey, look at GJ, hey, look at GU, are you looking at AU, which is Australian dollar versus the US dollar, AUD/USD? Different things like that makes you understand that they're just talking about pairs to look at. Now, if you ever hear someone say bearish, bearish simply means the market is going in a downwards trend, which means the market's going lower and lower consistently, not higher. If you hear the word bullish, that means the exact opposite. That means that the market is going upwards more than downwards. Now, if you hear someone say trending, trending is the same thing. That means the way the market is moving. So if a market is trending in a certain direction, they mean the market is moving continuously time after time in a certain direction. You hear downtrend, which just means the market is constantly moving down, or uptrend, which means the market's constantly moving up. Now you also might hear some of these terms, like a channel. The market's in a channel. Basically, when you hear that, it means the market's stuck between 2 points that it keeps on bouncing between in a diagonal pattern. A consolidation is, again, when it's doing the same thing but in a flat pattern. So the market's not moving that much within the market. It's just staying within a small movement and barely moving, compared to a channel where it's bouncing between two areas in any direction. Consolidation is where it's just barely moving. A breakout is when it finally starts moving massively in a certain direction. That's what we would call a breakout. Now, a fake out or a stop hunt basically is what it means when the market moves dramatically in the opposite direction where it's actually going to go, and then spikes in the correct direction and continues going. So it tries to obviously close people's trades in the negatives before start going in where they would be positive. That we would also call as a fake out or stop hunt. So these are just some of the most common terms you're going to have to understand before we go into our lessons, so that you're more prepared for what we're going to go over. And once you understand these terms and once these make sense to you, then we'll be able to fully understand everything I'm going to teach you and how to trade Forex. So thank you for understanding these terms, and let's get on to the next lesson.